Good morning, this is Kim, and I'm going to talk with you about your homework for Thursday, which is focused on Chapter 7. And in Chapter 7, it's a very important chapter because we're going to start evaluating stocks and learn different methodologies for doing that. The first one being top down stock evaluations. So, just going through this briefly here, the first thing I want you to do is to develop an economic outlook. In other words, the biggest picture possible. What is going to happen in our economy in terms of growth, interest rates, unemployment and jobs, retail sales, housing, etc. And in order to get a good economic outlook picture, I want you to search for online publications. And I mentioned here that I particularly like Forbes and Kiplinger. So for example, if I went in here, I could show you that in Kiplinger, here's October 2016. So of course we want to get an economic outlet that's very recent, but they have all these different categories that we're interested in learning about as they relate to how well our stock might do over time. So if you don't want to use those, that's fine. There are plenty of other economic forecasts and outlooks. Just make sure you use one that is current. In other words, it wouldn't make any sense to use one from January considering that we're now in October. And then the big question is, why do we do this? Well, we have a business cycle that's explained in your chapter, and depending on where we are in that business cycle could determine how well the stocks are going to do overall. So, what is the health of our economy? Better health of our economy, the better stock prices do, and vice versa. Okay, so once we get that overview, we're going to now pick a stock in your lineup that I asked you to pick up for homework last week, and you're going to research the sector that that stock belongs. So, for example, I'm going to show you one that I did. I picked Visa, and the sector it belongs in is financial services. So we're going to want to look at that and see how the sector is expected to perform over time. And is Visa a good choice, or is Visa and perhaps another competitor of Visa a good choice? So I'm going to show you the information that I use to flesh that out. And finally, we're going to complete a fundamental analysis. Now, fundamental analysis means that we're going to look at the financial statistics of the company and try to make a good decision about a stock purchase. So, ready? Here we go. In your weekly homework folder, what I've prepared for you is a spreadsheet. It has two tabs. It has a company tab and a summary tab. So I'm going to go to the company tab first, and I'm going to show you that I picked to research, as an example, Visa. And I want you to pick two close competitors, so I picked MasterCard and American Express. So next I had to go in and collect all of this information from the balance sheet, from the income statement, and then lastly just general statistics from finance.yahoo.com. So in collecting this information, I'm going to go here, I'm going to open up finance.yahoo.com, and I'm going to wait a second for this to load. I'm going to key in Visa. Now, you looked at other sites. You can use whatever site you want to collect information. This is the site that I'm demonstrating. So I'm going to shrink that a little bit and note that over here I need to collect some specific information from the balance sheet, for example. You have to ignore my dog if you can hear him barking in the background. Okay, let me just line this up. So from the balance sheet, so I'm going to go over here in finance.yahoo under the financials tab, and here I can see that I have the income statement, the cash flow right here, and the balance sheet. So I want some balance sheet information. And now I can just scroll down and pick and choose what I need. I need current assets, current liabilities. So here's total current assets right here, and then total current liabilities are going to be down here. So this is what the company owns, assets, and this is what they owe, liabilities. There are some other things I need. I need inventory. So again, that's an asset. It's something they own. And for Visa and MasterCard and American Express for that matter, they don't carry inventory. They're not selling any particular type of product, so there's no inventory. Now, accounts receivable. Again, it's listed here as net receivables, but it's the same thing. Net receivables are what your customers owe you. So you've extended credit to these customers, and this is what the current balance for Visa that they are due. Next, we're looking at total assets, which is again here, total assets. Finally, we're going down to long-term debt. Here is long-term debt, and it looks like Visa does not have any long-term debt. This is the category we're looking at. We're not looking at any of these deferred long-terms, just sticking with that. And then finally, stockholders' equity. And make sure you scroll down to the bottom. This is what the stockholders have in equity, their ownership portion of the company. So you would just literally key these in to this worksheet or copy and paste, whatever you want to do, and then move on down. The next bit of information is from the income statement. So you're going to go back up here in finance.yahoo and just click on the income statement and collect the same information. Sales revenue. Sales revenue, it's total revenue. It is the top line. It's not the cost of revenue. It's not gross profit. It's the total revenue from the company. And while I'm here, I just like to take a quick look. I'm only interested in companies that are growing over time. So if I look here at Visa, at least through 2015, I can see that their sales revenue has increased over time. I haven't checked out growth rates, but I have looked at it, and at least I'm comfortable with that. Net profit after taxes is going to be down here at the bottom. It normally says net profit or net income right here. Net income. And then earnings before interest and taxes. Again, I think you'll be able to find these quite easily. And then any interest expense. And there was no interest expense for American Express. Okay, then lastly, we're going to collect the data that's down here on the bottom. And to do that, I think it's easiest to just go into finance.yahoo and click on statistics. Statistics has almost everything on here that you're going to need. So for example, the price is 81, well now it's down, the market's down today, so it's 81.70. And earnings per share, again, earnings per share is going to be down here in right there on the income statement. Diluted earnings per share is now how Yahoo reports it, so it's $2.35. I'm going to skip the 5-year growth rate because that's an anomaly and it's not on this page, but I'll show you where it is. Next, there's a whole section in here on dividends. Here's all your dividend information, so you can pick up dividends per share, which we use trailing, so it's 56 cents. You can pick up book value is going to be on the balance sheet. There's book value per share. This is assets minus liabilities. Next, we're going to price to book value, and that's going to be, sorry to feel like I'm sending you on a spinning tour. So price to book is right there. And then next we're going to look at the PE ratio. We use trailing. We're not going to use a projection. We're going to use what is right now, and it's 34.73. These are slightly different because I did this already and now the price has changed, so some of these numbers have changed. Return on assets and return on equity right here, management effectiveness indicators. The price earnings growth ratio or PEG ratio is right there. I didn't use, I did use this one, 1.86, and we're going to talk about that in a minute. And lastly, dividend payout is going to be under the dividend category, and beta. Beta is right at the top up here. Beta is a measure of risk. How risky this stock is compared to the market overall, and actually I have another short video that I make for my other class which talks a bit more about beta. Okay, so now I've told you how to collect this information except for the 5-year growth rate. So in order to collect the 5-year growth rate, you're going to go click back on the summary page here, and we're going to scroll down. We want to go over here. Actually, let me move this over to this category right here where it says, why this can really, must have clicked something inadvertently. So I'm going to go back to the summary page. I'm going to go to this earnings tab right next to the chart. I'm going to go to the earnings tab. And then I want to look at down here in the earnings history. Growth estimates, past 5 years. This has been the growth rate for Visa over the last five years. And this is a projected, but I'm going to use what's been done, historical information. All right, so now that you have collected all the necessary data, you're going to then click on the tab right here that says Summary. So I have already put in all of the calculations necessary to do the current ratio, the quick ratio, etc. All of these activity measures that are described in Chapter 7. For example, it says here, in the first one, the current ratio or liquidity ratios. Can the company meet its current expenses? We want something 1 or over 1 or higher. So you can see for all of these companies, the current ratio and the quick ratio are over 1, which means that these companies have more cash than they do, more assets than they do liabilities. So they're statistically or financially speaking, they are in good shape. Next are activity measures, how well the company turns over its receivables. So in other words, we don't want to carry accounts receivable for a long time. That means that customers aren't paying their bills. So we want a typically higher receivable. Now American Express could be due to the nature of the way American Express is paid, has a very low receivables turnover. All of these say 0 because none of these companies carry any inventory. Again, they're not selling a product that we can hold. And lastly, asset turnovers. How much revenue is generated from every dollar of assets? And if we're going to buy an asset, remember an asset could be a building, or it could be a piece of equipment, or it's a big purchase. We want to make sure that our sales are supporting any of these asset purchases. So we want something that's higher. And in this list, MasterCard is the highest at 59 cents for every dollar of assets. And again, American Express being the lowest. Okay, you can go through these, and I really want you to understand what these measures are talking about. That's part of your homework. So again, just collect the company information, let the spreadsheet do all the math over here. It'll calculate all these ratios for you. And then finally, over here you see that I have industry, because, well, how well do these companies compare to the industry, for example? So the net profit margin, let's go down here for one, is you can see the profit margin of all these companies. 45 for Visa. Yeah, they're really making a lot of money off of people who use their credit cards and their debit cards. MasterCard's at 45%, American Express is at 15%, and the industry is at 19.9%. Change the format on this for you guys. And similarly here, return on equity. The general rule of thumb is that we want something over 10%, and the industry is over 10%, but look at MasterCard. Its return on equity, which is a major financial indicator for fundamental analysis, is up at 63%. And then finally, we have earnings per share. Here, American Express wins. Dividends, American Express is the highest. Price earnings ratio, again, we would want low. You'll hear that from another video, and American Express is the lowest. PEG, we're probably looking for something close to 1. So here American Express would be the closest to 1. All of these are kind of high. And the rest of the information that you're going to read about in Chapter 7. I should point out, going back to the company, that you're going to do this 3 times. So I collected information for Visa and then again for MasterCard and American Express using the same process I explained earlier. Okay, so what? So we did this, and now we have this summary. So we've looked at the economic analysis. We have a general understanding of the sector, which I'll go to another website. And now we've looked at the individual companies. And what do we see? I mean, let's say that the projection for financial services is great and expected to grow. Okay, well that's good for that sector. So I know there's a lot of growth opportunity, at least that's what the research analysts say. So I'm interested in purchasing a stock in the financial sector. And now I've looked at 3, and maybe Visa or MasterCard stand out a little bit higher than American Express until I get down here to earnings per share and a low PE. Maybe there's opportunity for me to make some money in American Express. So I'm not conclusive as a result of this analysis. So I take it one step further, which I'm going to show you right now. I have a library account at the Sacramento Public Library. So let me just show you how this works. If I go to the Sacramento Public Library, by the way, you can sign up for an account online. You do not need to go down there. And it offers you, once online, research materials that I use often. So here under research, I'm going to go under business and finance. And I particularly want to look at Morningstar. So Morningstar is a private or a public company, actually, that's their job. They have a lot of analysts, and they research a lot of companies to provide good premium information for investment houses, for lots of people who use investments. Now, typically you have to pay for this information. So if you were to get it on your own, you would have to sign up and receive a subscription from Morningstar. Well, I don't want to do that. That's a waste of my money, and I'd rather spend my money on something else. So I just sign up online at the public library, and then I have access to all this for free, their premium services. So I'm going to go here, and the first thing that I want to do is, and we'll use this often for other things, but I'm going to take a look over here at the markets. So I'm going to pop into sectors right here. Actually, I'm going to pop back out. That's not where I wanted to go. I'm going to go look at, just key on the markets, get returns. This is the page I wanted. This has a lot of links to very good materials. First, there's a sector reports tab over here. And for me, I know Visa is in financial services. So I can go click on financial services right here and see that Morningstar has prepared a whole sector report of information that they update regularly that I can use to see or to gauge how well the financial services sector is going to do over time. So this mentions Brexit. It has several bits of information that's important for me to make a decision. So I read through that, and I still really am interested in buying a financial services stock. In addition to that, if I go back to that page, there are specific industry reports. So we're going to go look at the latest industry reports, Q3. So here's the market outlook. And again, there's several bits of information on all different industries and sectors. So you could look at that as well, depending on the stocks that you want to consider buying. You want to see if those stocks, again, this approach, looking at the economy, then looking at that specific sector. For example, maybe you picked a car company. I mean, what's the forecast for the automobile sector? Is it up? Is it down? Is it flat? Uh, just to give you more information, you should understand what you're buying. Okay, so in addition to those bits of information, what I particularly like, and this actually seems like cheating a little bit, is I can type in Visa in here in the search box, and it has everything I need to evaluate a stock. It even has performance figures, key ratios, so I could go on here and I could find key ratios, etc. Payout ratio. So you could use this as another hub if you wanted to collect your information. But what I really like here is this tab called Stock Analysis. Again, this is this premium service that we don't have to pay for as long as we are a member of the library. So this person who's an equity analyst just provided me with really up-to-date information on Visa. And I'm going to read it. It has, most recently the CEO resigned and he was replaced. That might cause an event price movement for my stock. It says here Visa's in the midst of considerable change, etc. Okay, it goes on to really tell me what this person or this analyst thinks is going to happen because they did a very detailed analysis of Visa. Now, Morningstar uses this term called economic moat. Companies with a wide economic moat generally do better than companies that don't have a wide economic moat. So maybe I'll ask you to do some research on that. Anyway, here's the valuation. So their fair value estimate as of 7/7 for Visa is $104 a share. And I know that Visa is trading for $81 a share. So there's opportunity for Visa to increase in price. Here's a risk. Here's management. It's all this great information that I want to read about before I make a purchase and buy Visa. Now, just to let you know, I'm going to go back up here and I'm going to do the same thing for MasterCard. And here's my quote for MasterCard. And I can again go to that stock analysis. And here's all the same information on MasterCard. So this is what I want you to do. I want you to get excited about this, and I even want you to be more excited about collecting information. Buying stocks without any research just doesn't make sense to me. And really everything I've talked about, you don't need to write it all on paper. You'll be very good at just taking a quick review of the key statistics, going and reading some of the research reports, and really having a handle on the overall economy. And what I mean by that is, are we about to tip into another recession? Because we typically have recessions that go in cycles. So we've been in this recovery period for 7 years, and that's a long time for a recovery period. So are we due for another recession? And if we are, what kind of stocks should we buy during a downturn in the market? Well, really, it should be blue chip. So again, it's really important that we understand where our economy is going. Do we have another year of growth? In which case we can benefit from other types of stock categories. So I think that's it. I hope this helped. Again, the economic analysis is first. You'll do research online, followed by a sector analysis, which you could do right here in Morningstar. And then you'll collect all the data for each company that you picked. And then finally, you can go to Morningstar and read about these companies and the in-depth research that's been done. And of course, the end result would be for you to say, you know what, I've read enough information and I'm really bullish, or if I could, I would buy this stock. Okay, thanks. I'm signing off now and I can't wait to read these. Bye.